Hello everyone, welcome to my channel, and we are in the middle of earnings season. So today I want to run through some of the biggest earnings this week and see whether they've beat, whether they've missed expectations, future guidance, and what has been the reason behind the results. So I'm going to run through Rigetti, Cisco Systems, Alibaba, Walmart, and TakeTwo Interactive. The timestamps below will be below in the description in case you just want to skip, but let's jump straight into the first one. First up is Rigetti, who are a company that specializes in building and deploying integrated quantum computer systems, specifically using superconducting qubit technology. So the earnings per share beat expectations by 317%, and that's up to 13 cents per share. However, the revenue missed expectations by 42%, so they only made a revenue of 1.47 million. If we look at the year-over-year stats, earnings per share was up 193% year-over-year, and revenue was down 52% year-over-year. As of March 31st, 2025, cash equivalents and available for sale investments totaled $209 million, and as of April 30th, following the previously announced closing of the share purchase by Quanta Computer, cash equivalents and available for sale investments totaled $237 million. And they've come out and said that Rigetti is proud to be awarded important government-funded projects in the US and UK to advance their technology, and this demonstrates continued leadership in superconducting quantum computing, and they are also making great strides in developing innovative approaches to scaling to higher qubit count systems. And for the future outlook of Rigetti, analysts forecast revenue growth of approximately 40% annually over the next 3 years, which outpaces the broader semiconductor industry's expected growth. Moving on to the next stock that I want to highlight, and that is Cisco Systems, the IT giant. So looking at the earnings per share, they beat expectations by 4% and had 96 cents earnings per share. Revenue beat expectations by 1%, so they had a revenue of 14.15 billion if you round it. And year-over-year performance, earnings per share is up 9%, revenue is up 11%, so that's quite good. They have authorized an additional $15 billion worth of share repurchases, so that is one way to return capital back to investors, and they will be happy with that. If you look at the segment revenue breakdown, all of the segments were in profit. So networking, security, collaboration, observability and services were all up, with security being up 54% year on year and observability being up 24% year on year. The others were just in the single digits. And from their strategic and operational updates, product orders were up 20% year on year and 9% year on year if you exclude the product Splunk. AI infrastructure orders from web scale customers exceeded $600 million. They've declared a quarterly dividend payment of 41 cents per share. They were able to return 3.1 billion to shareholders via buybacks and dividends, and they closed the acquisition of SnapAttack to expand their threat detection platform. So overall, Cisco have done quite well. That is quite positive. They've grown in every segment, they've beat expectations, and they are returning capital to investors. What more could you want? Now we will move on to Alibaba. If you don't know what Alibaba is, it is a Chinese multinational technology company that specializes in e-commerce, retail, internet, and technology. So if we look at the performance, they missed both of their expectations. So earnings per share missed by 3%. They had an earnings per share of $1.73 and revenue missed by 2%. So earnings per share year over year is still up 24% and revenue is up 6% year over year. Challenges wise, the company faced headwinds from a slowdown in Chinese consumer spending and increased competition in the domestic market, and it is yet to see what effect tariffs could have on Alibaba's performance, but we'll obviously, with the tariffs paused, we'll see what ends up happening. And future outlook, the Alibaba plans to invest 53 billion in AI and cloud infrastructure over the next 3 years. signaling a focus on long-term growth. So I also believe they have brought out their own AI, which is quite impressive. I'm not sure if it will be as well adopted as ChatGPT or Copilot or Gemini in the Western world, but it will be interesting to see what that does for Alibaba itself. In terms of the company missing both of its expectations, I don't think it's a big thing for them. They've still grown in the earnings per share and revenue year over year, and it's a bit like Amazon or Microsoft really. It's not going anywhere. It's a massive company. It's one earnings doesn't mean anything in the long-term performance, so I don't think it's going to be a worry for investors. But with that in mind, let's move on to Walmart. So if you don't know what Walmart is, it's a large American multinational retail corporation that operates a chain of hypermarkets, discount department stores, and grocery stores. They operate in the United States and 23 other countries, so it is quite widespread. But in terms of the earnings, they were able to beat earnings per share expectations by 5%. So they had an earnings per share of 61 cents per share, but they just missed their revenue expectations. But year over year performance, earnings per share was up 2% and revenue was up 3%. The company has said that the challenges they have is contending with higher expenses, ongoing inflation and potential tariff-induced price increases, which they will start to see the effects of around about now. Whether American starts getting inflation or not, because there's a lot of speculation that the Fed are going to cut the rates, so that'll be quite good. The future outlook, Walmart has issued cautious guidance for the financial year 2026, reflecting concerns over consumer spending trends amid economic uncertainties. Obviously, there was a lot of talk that America would go into a recession. I think that probability is now very low. So if they've given poor future outlook but actually perform well, I think the stock market will react well going forward. But yeah, they're just being a bit cautious at the minute, which I think is quite fair for the state of the world and the state of America, because no one knows what Donald Trump's doing. But yeah, that's it for Walmart. And moving on to the final one that I want to cover today is TakeTwo Interactive. So these are a gaming studio. They own the likes of Rockstar, 2K. I believe they own a mobile game studio, and they keep expanding. Their earnings per share was shocking. So they missed earnings per share expectations by 42,060%, and that is not a typo. They were expected to have minus 5 cents earnings per share. They had minus $21.08. However, revenue beat expectations by 2%. So what does that mean year over year? Earnings per share is down 24%, but revenue is up 17%. They said that the big miss is due to technological developments that they couldn't do. So that meant that they had to outsource it, which is quite insane, quite expensive. They have delayed the release of GTA 6 into the financial year 2027. So that's impacted financial projections for this year and the next. With financial year 2026 bookings forecasted between 5.9 billion and 6 billion, which is below Wall Street expectations. The future outlook for Take-Two is, despite near-term challenges, Take-Two plans to release 25 titles during the financial year 27 and 28, which includes GTA 6, which is expected to drive significant growth. I do think a lot of that is already priced into the stock price. But they've still got a lot of 2K games that come out. So there's NBA 2K, WWE 2K. I don't know any more after that. They're the sports that I follow on the 2K range. They've got Borderlands coming out, Civilization, I think it might be number 7 now. So they do have quite a lot of big titles coming out, but GTA is the title for Take-Two. So yeah, that's the state of Take-Two, and that is it for the video. So those are the 5 companies that I wanted to highlight for earnings in the last week. Let me know if you invested in any and what you think of those earnings, and let me know if there's any earnings coming up that you want me to cover. I hope you've enjoyed this video. Subscribe for more investing content. So I like to do breakdowns like this, quick summaries, look into different stocks, analyze them, and document my investing journey. Leave a like if you have enjoyed, and follow for more, and I'll see you in the next one.